gambling. Trading is gambling without risk management. Yo, what's good, man? Shit. Alright, that was a good start. Yo, what's good, man? It's your boy Moosh. Moosh Effects. I already know, man. And as usual, free content, free education. Today is a really important topic, as you see from the title. Risk management. Probably the number one thing in trading. I'm not even going to lie. It is number one thing that you need to have in trading. Risk management and everything in risk management, like everything, it consists of how much you risk, etc. You probably have heard about risk management. I mean, I hope you do. If not, damn, you got shit to learn. I mean, it ain't actually that hard to know your risk management, but you following it's the hard part. And that's just me being real, because you need a good psychology, good mental headspace, whatever. You know what I mean. And with risk management there comes a responsibility, and you gotta be consistent with it. So Emma, let's just start this video. Okay, let me just start explaining about risk management. We can start from the most simple. We start from the simple, okay? I'm gonna do it like this, okay? Where the fuck is it? Okay. Risk management. Okay, risk management, as you heard. What does it consist of? We can start it like this. How much you risk per trade in percentage wise. I mean, obviously in trading you should always talk in percentage wise as usual. You shouldn't always talk about money, because I mean that's just facts. Obviously the real traders know that what I'm talking about. So how much you're gonna risk per trade in percentages. Let's say you have a $100,000 account. Okay, let's be real. Let's say you have a $1,000 account. How much are you gonna risk per trade in percentages? For example, if you risk 1%, and I recommend that whatsoever. I do recommend it. It's a really good start. It's a really good, I mean, not start, 1% is the way to go, bro. I'm not even going to lie. 1%. So if you have a $1,000 account, you're gonna risk 1%. How much is it? Did you skip math? I mean, I did. I'm kidding. Okay, I'm kidding. So 1%, $10. Okay, 1% per trade idea is really excellent. How the fuck is it? Excellent. Hold on. Oh. Excellent. It's really excellent. 1% is really good. I do it. Obviously, sometimes you may accidentally risk a little bit too much because of the spreads, and when you take the trade, you get filled a little bit over there, so you're gonna risk 1.5. But that's why you gotta get a good broker, and sometimes they just lag. But 1%. And the thing about this risk management, you gotta be consistent with it, because if you stay consistent with it, you're gonna see consistent results. Obviously, you gotta know how to trade, but consistency is the key in trading. Without consistency, you're not gonna last in this game. But obviously, that is something that you can work on. That is something that you can get better at, in consistency. And just remember 1% rule. I mean, for me, and I know a lot of traders who risk 1%, but a lot of new traders, they don't know about risk management. They don't know how much they should trade. So keep in mind 1%, okay? That's what I recommend always. And let's be honest, keep it 1%. Don't do let's say you have a trading plan. Do not write 1, 2, 3 percentages per trade. Just write one number, okay? One number. Stay consistent with it. 2%, 1%, 0.5. I recommend 1%, but obviously if you're a really beginner, then 0.5 is good. 0.5, And that's the start, like, remember, risk 1% each trade in percentage wise, obviously. Obviously. Okay. What's next in risk management? You guessed it. Okay, I don't know if you guessed it, but I assume you guessed it. Risk to reward ratio. RR. What does it mean? What does risk to reward ratio mean? Okay, like this. When you have a good risk to reward ratio, that means you're gonna risk, let's say 1%, but you're gonna win more. Like, hope you understand, like, you risk 1%. Okay, let's say it like this. When you lose 1% on that particular trade. This is the losing. But when you win, let's say you have a 1 to 2 risk reward ratio, or 1 to 3. Let's say it's 1 to 2. If you lose it, you lose 1, okay? If you win 2. So it's a good risk reward ratio. 1 to 3 and up is good, but keep this in mind, okay? Keep this in mind. If you have multiple take profits in one trade, that means the risk reward ratio is going to be slightly smaller, because obviously if you take partials, it's going to like reduce the profits slightly, but it's going to increase the probability of you winning the trade. Because for me, I used to only have one take profit, but I switched it to like 2 or 3 because it increases win rate. And for me, I know where to put the take profits. Where should you put it? In areas of liquidity, in areas that the price could switch bias, switch direction, and you're just gonna increase the odds. You're gonna increase win rate, and well, for some people it may increase the odds. But obviously some people like to have only one take profit, because they can take like 5 trades in a row and lose all of them, but they know that one trade is gonna outweigh them all. Like, let's say you have a 1 to 5 risk reward ratio. 1 to 5 risk reward, 1 to 5 RR. You lose 5 in a row, but you win one trade. You're gonna outweigh them all. That sounds crazy, but it's true. If you have a 1 to 5, but 1 to 5 it's good, but it decreases your win rate. Let's be totally honest, okay? Totally honest. It depends. If you're a swing trader, you know how to take those big ass trades. But I'm a day trader. I focus on the short term of trades. But obviously I look at trading in the long term. So yeah, I'm a day trader, and that's what's up. But obviously it depends. Swing traders, they like big RRs. If you are a day trader, you can also have a big RR, but just be smart with it, because like, know how to exit, know how to do this and that, But that's another topic. Now I'm talking about the risk management. Okay, choose what is going to be your risk reward ratio. Are you going to be the guy with one take profit, but a really good risk reward ratio? Like, a good risk reward ratio is 1 to 3 and up. 1 to 2 is good, but if you have only one take 1 to 2 is good, but it has a minus also, because you have to be correct many times. But if you have a 1 to 3, you can be correct not that many times. Believe me or not, with a 1 to 3 risk reward ratio, with one take profit, you can have like 30% win rate and still have a net profit in the end of the month. Like, That sounds crazy, but it's true. Let's say you take 10 trades, you win. Hold on, let me just show you like this. Let's say out of 10 trades with 1, 2, 3 RR and one take profit, only one take profit in this case. If you take multiple, that's different. But with 1 to 3 RR and one take profit, with a, let's say you lose 7 trades equals 7%. Let's say if it would be a 10K account, $10,000, that would equal to $700. Okay, what? Equal to $700 in 10K account. Okay, but then but then what happens with a 1 to 3 restored ratio? After you lose, you're like, okay, I trust my analysis. I trust, I'm gonna win those back. You win 3 in a row or whatever, like however you want to combine those. Win 2, okay. Let's say you lost those 7%, but you still have 3 left. You win them. You win 3 equals to 3x3. Why is it 3x3? 3 trades x 3%, because every time you win you get 3%. So that equals to 9%. And in that trading 10K trading account, that would be $900. You get that? So what would happen? So that's the profit, and that's the lose. This is the loser. Equals to $200 profit. That's good. That's 2%. Like 2% for, okay, that may not sound that much, but imagine that on a high capital. That's about trading. People think that trading is all about big percentages, big money. It can be, but with low capital, then it's not going to be that. But you gotta understand, if some traders could have like $1 million in one account. 2%. You know how much is 2%? That's 20K. That would be 20K profit. 20K profit in $1 million account. Obviously, I don't suggest you putting $1 million in an account if you have that money, because if you don't know how to trade, that's gonna be fucked up. I ain't gonna lie, that's gonna be fucked up. But with risk management, as you saw, gonna be good. Obviously, have a good win rate, and that's gonna be better. Imagine with a 70%, that was 30% win rate, okay? That was 30% win rate. Now imagine with a higher win rate. But obviously, you gotta remember that if you have a one take profit and big RR, the chances of your wins are gonna be smaller, but the profit's gonna be bigger. So that is also a restored ratio, like with multiple take profits, higher win rate, smaller profits. With one take profit, big RR, bigger profits, smaller win rate. Okay? And that's how it goes. So think about it with odds. Think about trading with odds, okay? It's all about odds. And some people take profits fit in their psychology. Some people want take profit and big RR fits their psychology. Okay? It's all about here. It's all a mental game, okay? All personal. It's all personal. So that is about risk management. Pretty simple. I know that is kind of simple, but the action is harder. You doing it every day, consistently, no over leveraging, staying with that 1%, staying with the risk management, staying with the risk reward ratio, and just being consistent. That's the hard part, man. That's the hard part in trading, and obviously in any other business, you like you want to quit, you ain't see progress, you want to quit, bro. Just have patience. Have patience. Obviously, like I've told you, like I've told people, trading is not for everybody. It is a mental game. It is a. It's all about. It's all in here. Okay, you versus you. That's the best way to say it. You versus you in trading. That's trading. Okay. And if you don't think that you don't have the psychology, you don't have the mind in the head game, yo, pause. Okay. Yeah, but it's all here. Okay, it's all here. I mean, that's about risk management for the day. Okay, that was kind of simple. I hope you understand. I hope you understood. But remember, ending. This is the end. Risk manage is everything. Okay. Without risk management, trading is all gambling. Okay. Without risk management, without you knowing your risk, without you staying consistent with your risk, without you knowing how much to risk, it's gambling. Trading is gambling without risk management. Hope you understand. And I want you to know that. And that's about it. That's about it. Risk management is everything. Read that shit. Read that. And remember that. Okay? Peace.